Hey everybody, Douglas Hart, Nexa Mortgage. Wanted to talk to my loan officer friends about interest rates. Not talking about where they're heading, not talking about where they've been, not talking about inflation, loan level price adjustments. I'm talking about understanding what your price to the consumer actually is. Irony, most don't know. And one of the common responses that I hear from loan officers that I talk to daily is, yeah, I don't have a problem with higher rates. I can sell rates. That's not really what I would have a problem with, is selling them or not. High rates to me are indicative of a high market, not the wrong setup or trade. And one of the more common questions that I'm starting to ask now is, hey, if you had your perfect scenario and you chose what the setup would be, you're the one bringing the loans in the door, what would you feel is a fair compensation for your employer out of your loans? In other words, is a 50-50 split good? Are you good with 25% and they get 75%? Or are you not good with that? Because here's the thing, I've seen both of those scenarios on the lending side quite often. 50-50 split is less common. More than likely, it's like a 30-35% split to the LO, and the rest is corporate margin. Now, the whole thing about this is, number one, those margins move, and they can move, and you don't know if they're going to move. So another question I've been asking, if your margins were moved, would you want to know about it? And if they moved up, would you expect a compensation increase to go with that, moving up? In other words, if you're charging more, I should make more because I'm the one bringing it to the table. Now, by all means, if you're getting leads or something like that, then of course, a lower compensation is reflective of the amount of work that you're putting into that client. But if it's your client and you're self-sustaining LO, doesn't it come down to how much is charged to your consumer is based on how much are you making, and then how much is the company you're working for making? That is it. So what is a fair trade or assessment for that? If you were to hire you, how much would you pay you versus how much would you feel you need to take? That's what it comes down to. So I just wanted to go over this because the irony is most loan officers don't even know where the rates come from. So just covering all the angles, I want to explain. I mean, we start with the current MBS coupon that's being traded. All right, that's where it all starts. And sometimes you'll see better pricing on the 8th than on the quarter because those trade on different coupons. So sometimes a coupon might be buying deeper or paying better than another coupon based on the 8th or the quarter. But at the end of the day, we start with that coupon that everybody is trading or pricing loans from. All right. Then we pack in the aggregator or lender margin. All right. Aggregator or lender is the people that are going to actually close this loan, service this loan. At the end of the day, they have the product. All right. Now, retail lenders have delegated underwriters that can underwrite, close, and fund, but the intention is going to that lender. All right. And they're the people servicing the loan. So at the end of the day, they have their own margin packed in, just like wholesale lenders have their margin packed in as well. So at this point in time, we have coupon traded, aggregator or lender margin, and then it's delivered to the market being brokers and lenders. All right. Now, at this point in time, we're pretty much even keel, and this is considered raw pricing. Raw pricing is once we get it from the aggregators or lenders with no compensation cooked in. That's basically the lowest we're going to get without charging additional fees to get it. All right. Now, raw rate starts there, and then you start adding what's charged to the consumer. If you are at a broker, we are capped at 275 basis points. So you'll never see more than that charged. And then your split is obviously your loan officer comp minus the broker charge, minus the loan officer comp is how much the corporate margin is. So it's very easy to tell the corporate margin on every single loan because it's a matter of how you charge versus what you get paid. There's only two people in that transaction. On the lender side, they're not capped. So what that means is they can charge, I've seen 400, 500, 600 basis points. I've seen almost 700 basis points on Govy loans as a charge to the consumer, where the loan officer is making 150 basis points. I mean, so when you say, and I'm going back to the comment, I don't care about rate. To me, what I hear is I don't care how much my employer makes on my loans. And I really don't care how much I charge my consumers. I really don't care. And I know that 99.9 out of 100 loan officers are going to care about both of those. They don't want somebody else taking double or triple what they're making on their own clients. That's just not where any productive loan officer would see that to be a fair trade. So I want to unveil this. At the end of the day, if you have access to raw pricing, you know exactly what your margins are. Now, on the lender side, I told you broker only has two people in there, the broker and the LO. That's it, all right? On the lender side, you have the lender margin, then the branch margin if you work for a branch, then the loan officer comp. So, you know, understand if you're a loan officer that works for a branch, your branch is making a little piece on you, and then the corporate is making a piece on both of you, all right? So, end of the day, it really comes down to this. If your compensation is 150, what do you think a fair amount for your corporate to make would be? Would it be the same as you? Would it be less? These are on loans that you procure, your clients, that you bring to the table and close with them. What is a fair trade? Think about this, because at the end of the day, you can reach out to me and I'll give you a tool that is free that shows you raw rates today, current raw rates. And I'll even show you how to use it. The bottom line is be in the know. We're in 2023. I know everybody didn't have a stellar year last year. The numbers don't lie. So what are you going to do to make a difference here? Because I can promise you over the last year, your lender has probably laid people off, or your company, if you're on the retail side, your company has probably laid people off, raised their margins to accommodate the less profitability, or cut your comp, or both cut your comp and raise their margins. One of the two. I mean, or both maybe. So at the end of the day, you really got to think about this. How much are you willing to pay to close your loans? Because that's what your circumstance is. You're the person bringing the business in. How much are you willing to pay to close it? With technology right now, you are in charge. I implore you to get in touch with me. I'll send you a raw rate and come over every Thursday. The CEO of our company does a meeting every Thursday to talk about the transparency of what we have to offer. And that's a CEO of a company with 2,200 loan officers and growing that makes himself available to come interview for you. In other words, he's not interviewing you, you're interviewing him. And he stays on that call for an hour, 2 hours, 3 hours sometimes to answer every question before it's over. That's impressive to me. That's who I want to work for. This guy also only takes 55 basis points max and gives you ways to make more. That's a pretty good trade for me. I don't mind paying 55 basis points. That's like 20% of my deal. That's a fair trade to me. You know, I make 220 basis points as a minimum on a 275 charge. It's a good trade to me. I have 200 plus lenders. That's a great thing for me. I never run out of product. You know, so at the end of the day, you really got to look at what fits you, and you got to have knowledge about what your current circumstance is before you decide if you should change it or not. At least know what it is. Most people don't, and they are alarmed when they find out. Get in touch with me. I'd love to help out.